for Daniel and Felix.
Appreciate you, man. Appreciate you.
Hey, thank you.
You do have a printout in front of you because a lot of stuff that you guys do.
Oh, keep in mind we made some edits over time, so yeah, on the presentation as well. But you guys can obviously take notes.
Wait, can I try something first real quick, Felix? All right, if you can hear me, clap once. If you want free money, clap twice. There you go. That's all right. Cool. All right, cool. Go ahead, Felix. Take it away, man.
Cool. Well, first and foremost, just want to thank Jorge and the team for putting all of this together. I'm sure it's, very difficult putting together an event, and especially all of you guys driving here on Saturday, taking some time off. Really, appreciate that. So give you guys, a pat on the back, and then let's get this presentation rolling. Just because today we have a very, very special topic, something that me and Daniel hold dear to our heart when it comes to helping other people and taking their credit to the next level. And that's really pretty much learning the concept of how to leverage credit to create more income, scale your business, and grow your wealth.
You don't have a clicker, right? No?
Cool. So just a quick background. We started this company 3 years ago, and then it's pretty much one of our, we want to make a profound effect on pretty much education at first, right? Teaching people how to understand credit, from the basics of credit to understand, how to leverage credit, and then from there build businesses. And as we started this company over the years, we attended a lot of events, provide a lot of education. We're not your typical TikTok influencer out here, right? So we like to do what we pretty much are speaking as of right now. And then same goes with Daniel, as we can see here. Cool. So right off the bat, just want to say, a lot of information is going to be provided here. It might be anywhere from grade 1 upwards to 12. But information at the end of the day is just one thing, right? What's really important is the speed of implementation on your end. And regardless of the notes that you guys are taking, none of that really matters if you guys don't fully understand or immerse yourself in the whole experience of everything that we're trying to teach here today, right? So that being said, I'll let Daniel.
Awesome, guys. So there's going to be a 4-step framework we're going to go over, right? First one, if you want to scale your business, right, you want to use other people's money. We understand that, okay? So to scale, you want to fund more deals to create more income. There's going to be 4 distinct steps that we're going to go over. If you click the next slide. Sorry, I know we don't have a slide. I think this is the updates you did. It's okay, all good. So understanding why we want to use credit, right? Because who wants free money? Okay, you guys didn't sound excited. Who wants free money? All right, that's what I'm talking about. Okay, so you guys got to understand, we're in a country that has the most leverageable credit system in the world, right? You can be here without credit history, you can create it, and you can access money. If you have good credit, you can access money. You can, a lot of people that try to start businesses traditionally, they try to go get a loan at a bank, and they get nothing, right? But they'll get $100,000 to go to school and go in debt, right? Nothing wrong with that. I'm just saying I would rather have $100,000 to go invest in myself. Yes? Yes. Okay. Yes. So that's why we want to use credit, right? We just want to use it the right way, because what we don't want is we don't want bad credit. We want to use credit to leverage, to create wealth and accelerate growth, right? Because at the end of the day, all of us only have a certain amount of time. Yes? Right? So we want to accelerate that time, and credit is what allows you to do that. Right? So instead of burning money on interest, you want to be able to leverage as much as possible. So the next phase that we want to go into, and this is kind of that grade 1 to 12 that we're going to talk about, is understanding how to build a credit profile, right? What effects does it have, and what the cost is if you don't. Actually, we can go to stick to this one here for a second. So you guys can see, some of these are a little bit older rates, right? Who's in real estate in here? Like a lender or agent? Are you guys seeing what rates look like? Okay, so I want you guys to pay attention to what the cost of interest looks like depending on where your scores are at. So you're 620 to 640 here. You're paying 6.4. This is like a good rate now, right? This is a good rate now. We're talking when we had a 4.8. I mean, I seen some 2% interests back in the day, right? 760 to 850. Look at the difference in rent. This is over a 30-year mortgage. You're going to pay $355,000 in interest with okay credit, right? But you can pay $500,000 in interest with not so good credit on a $400,000 home, right? First of all, we're in California, right? So what's the average price of a home out here? Okay, so do you guys understand what this looks like when you're trying to purchase properties that are 600, 700? And that's why you guys are in the space where you're at, right? Arbitrage is a great place to be, and why we're leveraging. So now to go into a little bit more of the nitty gritty, Felix is going to take over and kind of give you guys this breakdown of what building a profile looks like. Yeah, I think the more of the story here is just 120 points difference in your credit score that can be easily tweaked, can save you $150,000 in total, right? Okay. So it's just like, okay, would you guys be willing to educate yourself on the basics of credit, making changes to your credit score, building good habits to save this much? Because at the end of the day, it's going to take a lot more time to save up that much, right?
So I'm sure you guys all understand like the basics of what makes up a credit score, but we're going to teach you how to manipulate each of the factors, which a lot of people don't really, kind of give you the education on growing up, right? So when you guys look at the breakdown, the 6 different factors of what makes up a credit score, 30% is utilization. That's in total of the revolving accounts and credit cards that you guys have, how much you guys are using towards the end of the month, right? So for anyone that's over 75%, obviously that's going to be very poor and can cause significant drop. And here's a cool little trick that I want to teach you guys. So on the utilization, there's something that's like the payment due date and there's a reporting date. So knowing the difference between those 2 dates will help you influence and really understand, when the credit bureaus or when the credit card companies report your balance to the credit bureaus, right? So how many of you guys here have Credit Karma? You guys have Credit Karma? Okay, so what you guys can do is go on Credit Karma and then scroll to your individual revolving credit card account. On the bottom, it's going to tell you the date. So for example, American Express, right, one of the credit cards, let's just say it reports on the 15th, but on American Express, the account, it tells you the payment due date is on the 10th. What you really want to pay attention to is the reporting date when American Express report the balance of that account over to the credit bureau, because that's how it's going to influence your scores, right?
So to give you a little bit insight right there, right? So keep this in mind. Let's say you need to use the card. So we're in business, right? We got to use these cards. We got to leverage. So what happens when you say, hey, I got to spend $5,000, $10,000, $3,000, and they're about to report that line, right? So in the example that Felix gave, right, they said the payment date is on the 10th and it's on the 15th. So what if you pay off your card on the 10th and then you use it back up by the 15th? What's going to happen to your credit score, guys? It's going to go up or down? It's going to go down, right? So it's just timing that. What if you waited a couple extra days or you paid it off right before again? Now, even if you had to max out that credit card, as long as it was after the reporting date, what happens? Is your score still going to be okay? That's hiding utilization. That's the hack, right? But if you don't know, like Felix was telling you, if you don't know the payment date and the reporting date, that can put you guys in a pickle. Some people have perfect payment history and they're like, dang, Felix, why is my score not going up? It's because they have no idea what's actually reporting to their credit bureaus, right? So just keep that in mind.
So second, we have on-time payments. So you're pretty much judged on how often you pay your payments on time. One thing I like to do is just because I have like over 30 accounts on my credit report is set everything on auto payments, right? So it's automated and you're actually removing your emotions out of it so you don't have to keep track of everything. And every single month, based on the date that you set the auto payments from, it will just pull from your checking account to pay off the balance, right? Derogatory marks, that makes it's 17.5% of what makes up a credit score, but that's basically if you miss more than 3 payments on a credit card, at a certain point, the bank's going to give up on trying to, collect that money that's owed by you. So what they would do is sell that debt over to a collection company, and then now these collection companies are going to go after you to recoup the debt, right? And usually when that happens, that would be a derogatory mark on your credit report. And even with just one derogatory mark, that's going to drop your score by over 100 points. And then average age of accounts, total accounts, and then inquiries, right? How many of you guys know what an inquiry is? Okay, good amount. So basically, every time you apply for credit, the lender is going to do a background check on you. So every time you apply for credit, there's going to be a one hard inquiry on credit report. Really depends on which bureaus they pull from at the end of the day. And one of the quick trick that I like to do, for any of you guys want to learn how to remove those hard inquiries off your credit report, we actually have a guide for you, so you guys can, go on to our Instagram and then DM us the word 24. We will actually send you a guide on how to remove those hard inquiries off your credit report, so it helps you jump your score by anywhere between 5 to 20 points. Right, within 24 hours.
So keep in mind, this isn't old school. You're not sending a letter. You're not waiting 30 to 45 days. You're going to get these off in 24 to 48 hours by following the guide that we're going to send you. This is just because you guys are in this group. We want to give you guys a little bit of value just at the beginning, right? So outside of that, you guys got to go to George and everyone else for more questions, right? But this is super helpful, guys, because the thing you guys got to understand about inquiries, yes, they're pulling your credit, but I just want you to process this, right? You go to the bank and they see that you ran your credit 24 times somewhere else, okay? And the other banks didn't give you credit. So obviously, the bank is now has a red flag to look at. I said, well, why didn't they give you credit? They might have actually given it to you, but because they saw so many people say no or maybe, that's a red flag to take a look, right? Does that make sense? right?
Yeah.
So you want to remove those things, especially if you didn't get approved, to increase your probability to make sure you're getting the highest chances of approval.
Yeah, it's basically an indicator of how often you're seeking for credit, right? And I like to use this analogy a lot. It's just like the more needy you are, the less kind of like, the more resistant that the lender or your girlfriend might have towards you. So use that as kind of like an analogy, right? So if you can remove that off your credit report, now they can see, in the past couple of years, how many times you've been applying for credit, and that put you in a better position to get approved. Cool. So growing up, I think, I grew up in one family home, and pretty much, we didn't have too much money. And it really starts with your belief system with everything that you guys do from this point on. And I feel like a big belief system for me when I grew up is, I thought the rich get rich and the poor gets poorer. That's until I really reframe my entire perspective of what this definition is. And by just switching 2 words out of that sentence, and then from this point on, I look at how I manage my money or how I leverage credit in a different perception where I wouldn't have if I didn't make that change, right? So for me, it's more of like the rich gets richer, but the poor can also get rich too. And the biggest difference is really understanding the education behind on how to leverage money as a tool for wealth creation.
So good debt versus bad debt. So here's the beautiful thing about debt, okay, and why it can make you so much money. So the last phrase that Felix talked about is super important because we know one thing is true. We know that debt is non-taxable, right? So we want to leverage what? We want to leverage debt. Let's try it again. We know debt is non-taxable. What do we want to leverage? Debt. There we go. Okay, so we want to leverage debt in a good way, but those are good assets. These are producing cash flowing assets. These are things like real estate, right? These are things like businesses. These are things that can be borrowed, that can appreciate, that can make you money. What's bad debt? A car. Where's George? Where's your Lambo? Not the Lambo. That one makes money, all right?
Over 100,000.
Yeah, that's different, right? Because he's leveraging it for good purposes, right? But the liability is if maybe you weren't ready for that car yet, right? Or you're buying things that aren't necessarily needed. The average family home in America has about $20,000 of credit card debt, right? And it's not towards anything good. That's for cars and TVs, right? And MacBooks that they don't need because they just wanted the newer model or they wanted the more comfy headphones, right? You don't need that stuff. You want to leverage it to make money because then at that point, then you can burn money on a car and it doesn't matter, like Jordan. I'm just kidding. But the whole idea is leveraging good debt, right? And sometimes we have to rethink these things, right? So when you're ladies, if you're at Ulta, you don't need that credit card, okay? Gentlemen, you're at Best Buy, you don't need that, okay? Right? You want to be able to leverage this stuff so eventually that these things can pay for all the things that you want to do, right? So just processing good debt, leveraging debt because it's non-taxable, okay? So I'm going to give you a little bit of the framework of why it's so important to do business credit. Do this,
Yeah. So now let's just go from the frameworks that we initially talked about. Now we have good credit. How do we leverage that to the next level to start, building the business or improving your business and bringing it to the next level, right? And one way that we found out is by leveraging business credit cards at no interest for the following reason, right? So number one, it's little to no risk. A lot of the partner lenders or a lot of these credit card companies, if you do default on that debt, it's considered unsecured, right? So do you guys know the difference between unsecured and secured type of lending in this case? Okay.
Yes, no, maybe.
So unsecured lending is solely based off of your credit score. You don't have to put up collateral. You don't have to put like tax returns, bank statements, and whatnot. Secure lending, on the other hand, is when you get a mortgage and you have to put your house as collateral, and they have like a
they ask you for everything, like your left kidney, or I don't know if you have your firstborn child. So instead of doing any of that,
collateral for sure. Yeah, so that's the biggest difference. So knowing that, I'm a little bit more confident in the way that I leverage this type of tool at the end of the day, right? Just because none of my assets are at risk and whatnot. Number two, we're getting the best of both worlds. Unsecured, you don't have to put up collateral. Not only that, but you don't have to pay interest at 0%. I always like to use the analogies like, Daniel, here's $100,000, right? You don't have to pay me any interest on it. Just pay me back within 24 months, right? Obviously, for you guys as investors, you guys know how to use that money that's not being paid on interest, make that spread by putting in an investment vehicle that's going to make you, 40, 50, 60% in return, right? So the mindset of understanding that we're playing an arbitrage game of borrowing money at a cheap cost and then we're making money at a higher yield.
Keep in mind here, guys, that the business credit, the reason it's so beautiful is because it's not going to report on your personal credit report, right? So in real estate, we end up needing to use money, right? And does everything always work out perfectly the way we want to? Yes or no? No. Sometimes sometimes you have to hold a little bit money a little bit longer than needed, right? Things happen. That's okay. But do you want to be penalized for that? No. So when a lot of people use personal credit, right, it shows up. And you had to borrow 30, 40,000 in your cards. They're kind of maxed out. You were supposed to, they were supposed to close. Something was supposed to pay out. Everything was supposed to be done. And all of a sudden, you're 5 days late to close. Something happened, right? And now the utilization showed up and your score tanked. Right, so business credit, it's not going to report that it's a separate entity. So even if you have this money borrowed out, if you do it right, it's not going to show up. Okay, some people do business credit cards and they still show up on their credit report. You got to mess up pretty bad to do that, but we don't do that. All right, I'm just saying, and we're going to teach you guys to not do that either. Okay, and then credibility, guys, and then rewards and cash back, guys. The beautiful thing about being in a space like this is you guys are investors, yes? Yes. Okay. Yes. Does everyone buy properties where they live? No. So what are you going to do? You got to travel. You got to look at places. You got to move back and forth. So wouldn't it be fun? Wouldn't it make sense that if you're doing all of that, that it was free, number one, and that it was nice, right? Like when you have to fly, right? First of all, you don't want to fly Spirit anymore. But if you have to, at least you can go to the Amex lounge before, right? You can have it's Spirit, so you're going to need at least one drink. I don't know. Burbank Airport was rough, guys. Something happened there, wrong airport. But my point is that if you're going to be in this industry, you want it to be enjoyable, right? And you want to maximize your reward. So by being able to leverage, you're investing. Because you're investing and borrowing at 0% and making more money, you get to travel better and even free. Does that make sense? Is that not what you want? Right, so it's something that makes sense, and then along the ways you get to build this credibility, you get to build this business entity. So at some point you can actually borrow the real money you're looking for, right? Who would want to borrow $500,000, $1 million, 1.5, $2 million, right? Like George said, 100 million is like what we need to get, right? So that's where you can get, but you have to build out the business profile to a certain extent so you can qualify for the things. And at the end of the day, it's time, guys. You can't hack this stuff. A lot of people talk about like authorized users. It's great, guys, but the bank knows it's not you. Just because you put a 40-year-old on an account that's your grandma's and she loves you, doesn't mean the bank loves you that much and they're going to give you the money, right? So you want to build that relationship and the credibility. And then we can go to the next slide here, guys. But this is the idea, right? This is the consensus of what we want to do.
Any questions so far? I'll make sure. Yeah.
How do you get approved for business credit if your business is brand new?
So it really depends on, so a quick little trick that I like to use is it really depends on how old the business is. Normally we do ask for like 6 months minimum, but sometimes I will apply as a sole proprietorship and then apply under my SSN to qualify for a business credit cards,
when you
right?
say 6 months, do you mean like since you got the LLC, or do you mean like since the door opened on your first property?
Yeah, since you incorporated.
Okay.
Yeah.
LLC, yeah. Mm-hmm. But the point that Felix made was pretty big. So technically speaking, you guys understand, you guys are all sole proprietorships anyways, right? You guys know that? Because it's just how we file taxes. At the end of the day, it's still our social, right? So by doing so and applying as a sole proprietorship, if you know what you're doing, we can actually still get business credit cards that don't report on your personal side. Yeah, so obviously you're not going to get 200,000 just like that, right? You're going to get a lower amount, but it's a way for you to still get your foot in the door if you don't have 2 years of business. I mean, who in here has been investing for more than 2 years? Okay, we got some people. So for those of you that aren't, that doesn't mean you can't get funding. We can still get you guys business funding, right? Just so you guys know. Okay.
Cool. So more of the story here is, getting funding for a brand new business or existing business at no interest up to $250,000 doesn't have to be nearly as complicated as a lot of people make it to be, right? Some people would tell you that you need to sign up for, get a website, get a 401 number, get a virtual address, or get a brick and mortar address to show legitimacy, or even build up your paydex score, which is your business credit score, up to 80 plus. And then sometimes there's other people that would tell you to build up these vendor accounts for the next 6 to 12 months that you're paying a subscription on. And a lot of times your money just go to waste, right? And this is my favorite one, just because a lot of times we start out with no revenue within the business, no bank statements or even tax returns for the business. You're still qualified to get up to $250,000 as long as your personal credit is up to par to what the lenders want. And then your age of the business over like 6 months in this case, right?
So I'll give you guys an example here, right? So who was like the best straight A student in school? Okay. Only one person. Hey, by the way,
She's so good at asking questions.
I'm with everybody else in this room, all right? I barely got you. Okay, let me ask you a question. Did you or did you not get to do whatever you want and no one really ever asked questions?
No.
No, really? That's
My
a.
dad was strict.
Okay, so your dad was a teacher. Okay, that
No,
does.
he wasn't a teacher.
No, at school. At school.
Oh, was I able to do whatever I wanted at school for the most part?
Yeah, for the most part, right? Why?
Yeah.
Because why? You build what?
Like trust.
Trust, credibility. Like they can see you in the middle of the day walking out. They're like, oh no, what was your name again?
Haley.
Haley. Oh, it's just Haley. She's fine. She'll be back. You
Yeah.
know, they don't ask her. That's exactly the relationship that happens with the banks if you can build a good profile so you don't have to do all of this, right? This is for like everyone else in the room that's like me, right? Barely graduating, you know, like you got to show them like proof, like, no, I came in at this time. I didn't ditch, right? Like I was here. I promise.
Yeah.
I even recorded. That's all of this. You don't have to do that though if you can build credibility. And that's what we're trying to show you so you can accelerate that timeline, right?
Yeah, definitely treat your credit score as kind of like a college transcript, and then the lenders as kind of like your employers, right? They really judge you by your GPA and then the classes that you take, same as what's going on with your credit report at the end of the day, right? So, quick little trick.
Yeah, Haley's good to go.
And then,
Wow, look, do you guys see this famous person over here? Felix,
where's
tell us who
Edgar?
this famous person?
right over here. Okay, so Edgar actually did business funding for himself. I think it was a couple years ago, and his business was like 6 months or 8 months at that time. Right, and then we pretty much just went through like a whole game plan, help him get some business credit cards, and off the bat, I was even surprised too, at 125,700 at no interest, right?
0%.
Yeah.
Beautiful. Beautiful. We're gonna give everyone an applause there. That's for Edgar right there.
Cool. All right, so now let's just go through the foundational steps, right? So now we understand what makes up a credit score, how to get good credit, why it's so important to have good credit in the first place to build your business and grow your business. It's really understanding, okay, what specific parameters across all lenders that these, what they're looking at in terms of your credit report, right? So first and foremost, personal credit, right? Treat it as kind of like a college transcript. The more experienced you are, the more classes that you take, is kind of like a correlation to how credible you are as a borrower, right? So having 5 personal accounts across, 5 personal accounts on your credit report, that's very important. 2 years plus in payment history, again, that adds more credibility. Having a 720 FICO score, FICO 8 score, so you guys should write this down. The FICO 8 score specifically for credit card applications is what the lender is gonna pull, right? Just because there's a different FICO score for any sort of financing that you do. So when you apply for a car, there's like a FICO 5 auto score, right? Which is totally different from the FICO 8 score, which is used to apply for credit cards in this case. And it's a different scoring algorithm that they use. And then you just want to make sure between all your accounts is less than 30% in this case, right?
Felix, where can we see our FICO scores, man? Yeah, I saw like 90% of the room raise their hand for Credit Karma, so you got to give them like where to actually look.
All right, so Credit Karma, they use a different scoring algorithm, and that's why it's free, right? So they use a Vanish score, which is usually 20 to 30% variation off of what your FICO score is when the lender pulls your credit, right? So in this case, if you guys are planning to apply for like a house, for like a mortgage, for like a loan, personal loan, business loan, whatever it is, you want to make sure you sign up for Experian.com, or you want to use myfico.com, and you actually need to pay for it just because they give you a breakdown of different scores that you're.
And Felix, because I pay, there's no hard inquiry, right?
Yeah, no hard inquiry.
So don't let a lender just run your stuff. Like, go check your stuff first before you do it. Myfico.com or Experian.com. Yeah. Yeah, I'll go.
Cool.
Right here.
So now let's just say you meet all of these
use it?
parameters, right, on the personal credit score side. Now you want to understand, okay, what does my business need to? The way that you structure your business is as important as well, right? And here's one of the best tricks that I like to give for anybody looking for credit card funding or credit card financing is that the way that you structure your business, when you open up your business, they're going to ask you what industry you're in, right? You guys tried that before, right? A lot of times, I know you guys are in real estate, but lenders hate that.
Don't
just
say
because
real estate.
based on seasonal economic standpoint of the industry itself, it fluctuates very heavily. So they classify that as a high-risk industry. Same with financial services, just because there's a lot of scams going on, there's a lot of chargebacks, so they don't like lending to those type of industry. Construction, that's a low margin business as well. So think of any other industries that are high margin, and I would recommend
Low overhead.
low overhead, high margin good year, seasonal periods and whatnot. And that would be e-commerce is a good one. I would, classify yourself as consulting. That's another big one. And then what's the last one? Marketing consultant.
So keep in mind, any of those three
Agency.
things that we just named, or agency, right? Do you have to have a brick and mortar? No, so low cost, right?
Yeah.
Do you have to have lots of supply or inventory? No, it's low cost, right? Low risk, because you're not holding on to stuff. There's no real risk there. So all you're looking for is they make money on business transactions. It's just deals, right? But when you say real estate, what does a bank automatically think? You need what? You need money for what? For some project that's going to get halfway done and then you're going to need no more money, right? Like, but the plumbing and that's what the bank's thinking. So they know it's a risk, right? They'll invest themselves because they can pull for more, but they don't want to lend it out. So what you're putting yourself at a disadvantage by starting entities like that, right? So it's the NIAC code, right? So guys, who just said? Let's go back over it again. You said consulting, marketing,
e-commerce, management consulting is a big one. What else? Does any industry that you guys know have low overhead and high margins?
Yeah.
Yeah.
So you focus on that, and then that gets you a much better position because it's just easy, right? And they're not asking as many questions. It's a safe industry. Go ahead.
If you previously applied your first time and you used that real estate,
Yes.
and now you're going to apply again and you're going to put consulting, are they looking at the previous time you?
Yeah, so
applied?
sometimes what they would do is cross-reference what's on the Secretary of State, right? So for example, you can pull up your articles of incorporation paper on the state's website in this case, and a lot of times you have the ability to change that industry code to a different industry and it will reflect on the state's website. So when you do apply again, you can put a different industry and that would match the different industry.
Like if like for example, I recently applied for a credit card and I think I put real estate when they asked my business type or what industry, I put that on my first application.
Yeah.
So in saying that, don't put that on your application. If I go to apply with them again,
We can go to a different bank.
I could go to a different
That-
bank, but I would assume that bank would cross-reference my first application with them, that it said
They
real
could.
estate versus they could.
They could.
Very unlikely. I
Yeah.
think it really depends which bank it is. But a lot of times you can kind of like, if they do question it, you can just say, I do marketing consulting for real estate agents in that case.
And
right?
you could just say, I didn't know how to categorize,
Yeah.
I put it wrong at the beginning, I fixed it, we're good. But just make sure you update the Secretary of State. That's
Yeah.
going to be the important
Well,
part.
because for Secretary of State, we have it as marketing, so I mean. if
Yeah.
we
Oh,
yeah,
go back
perfect.
to it,
Perfect,
I
yeah.
have that, and maybe, like you said, I actually do marketing for real estate and I got.
Exactly.
Which is true.
Yeah, you just messed up. You didn't, it's okay.
Yeah.
Everybody makes mistakes, guys. Okay. So the second part about this, guys, is the leverage part, right? So once we have this done, you want to build relationships. So there are some businesses that do have relationship banking. So where they're not looking for as much as a personal FICO. It's important, don't get me wrong, that doesn't mean you can have a 400 credit score, okay? But it means that what your deposits look like. Are you ever late? Is there ever overdraft? Those things can actually still get you funding. We've had some clients that over time, okay, not tomorrow, but they had maybe not the best scores under 700s, which is normally what we like to work with, 650s, 670s, and they're still getting 30, 40,000. But because they built a relationship. So was theirs the easiest route? No, they had to go a little bit of a more difficult route, but they built relationships with these banks, and there's certain banks that like it, where they have something called an internal score. So it's not even, they don't even pull your credit score all the time. They pull an internal score. So how many deposits do you get a month? Are you ever overdraft? Are you ever any of these things? How long have you been with us? And those things can still get credit limits. I've seen some people get, again, $25,000 card with their previous card being like 1,000. That's a pretty big deal, right? But that's relationship. So you always want to treat the relationships with these banks really, really, really well. You never want to overdraft. You always want to have direct deposits. That's nice. And then you want to build relationships with these bankers. So once you start getting, at a higher level, you're making more money. I'm sure, like, if anyone in here is at a higher level, right? When you go into the bank, they already know your last name, don't you? Right? They walk in like, oh, look who it is, like Mr. He. There's would you like this? Would you like a coffee? Right? That's the relationship you want, because what happens is those people now can fight for you a little bit more. Right? Because sometimes when you're applying for these products, you're building relationships, sometimes these banks might decline you. But let's just say let's just pretend Haley was our underwriter. No, Haley's like, no, I know Felix. Like, you don't understand. Like, he's been doing business with it. They can fight for that. They can actually do it. And they do if you build relationships. So that's why this is really important. Obviously, we're going to kind of hack that a little bit right before that. But once you have it, you want to start leveraging that and building them out. And then this is kind of how you build it out.
And just to add on top of the industry code, when you guys incorporate your business, it's also important the name of the business. You never want to put like real estate or any classification that falls you into any of those categories, right? Because I remember Daniel did like Daniel Properties LLC, for example. It's just like it goes against everything that we're like talking about.
Don't do that. Don't do that.
How do you know how to identify what banks to build that relationship with, or in other words, what banks are the best banks to open up your business bank accounts?
Yeah. So our favorite ones will always be Chase. I think Chase is a great one. American Express just started having their own checking account and savings account, and I just got approved for a line of credit with them, business line of credit, with no documents, right? So we didn't have to submit any documents. It's based on my history of the other credit card accounts I have them. U.S. Bank is a good one, and then PNC Bank as well. And if you guys are in the military, Navy Federal Credit Union is also really great too.
Yeah, and USAA.
Yeah. And the way that I filter those banks is based on their products and their interest rates afterwards. And then, yeah, how fast, how streamlined you can, apply for their financing products.
So sometimes you'll see that. Sorry, go ahead. Question.
The last one, was it a credit union or you don't recommend it?
USAA and Navy Federal. Those are both really great, but they're military banks. So you need to either be related to or live with a parent, cousin, aunt, uncle.
Or have someone sponsor
or
you.
join. Yeah, just enlist. Yeah. Or have someone sponsor you, but you have to get creative there, you have to be living with them, or some type of relationship has to be there in order to get sponsored into those. So Navy Federal is the largest credit union in the US. Great, amazing products. But again, you have to be military, you have to be sponsored, you have to do it right, because they're cracking down a little bit on sponsorship. So I suggest you do that only if you have some type of real relationship to a military.
Yeah. So now let's just say you meet both requirements. You have your LLC started, it's over 6 months, 3 months in this case. You have your business checking account. Now it's more of like, okay, how do I maximize the funding potential on both my business and the personal at the same time, right? So keep in mind that each bank have different application rules when it comes to applying with them, knowing that right off the bat. Because the way that we do it is we're very specific in the order that we do it, and we usually submit or build out the order first between all of these banks and then submit everything at once. And the reason why is because the timing of it is very, very vital when it comes to that, because each bank that pulls your credit, the other bank's gonna see it as well. But sometimes when you submit everything at once, the system kind of like delays, and they wouldn't see, okay, Daniel just applied for American Express, Bank of America, or 2 other products. We wouldn't see those inquiries appear on the credit report just because we submit it in such a quick timeline of like 50 seconds to like 2-minute window when it comes to building everything out. Yeah.
So the beautiful part about that is just process this, right? Let's say I'm going to use a very simple example. You go to get it. By the way, how are we doing on time?
Pretty good. About
Okay.
40 minutes.
Oh, wow.
Wow, we're good. Okay, we got plenty of time.
We love doing this.
Fast, let's go.
Give us more time.
All right, you guys get more secrets then. Okay, so let's just say like you went to go buy a car, right? Like who's ever bought a car before? It's a lot of fun, right? Yeah, no. Okay. Well, let's say you bought a car and they just give you a loan for $50,000, okay? And then you wait for that loan to show up. And then you go to another bank and then you say, I want to buy another car. Do you think the other bank wants to lend you money? No, okay. But when you buy a car, does the loan show up immediately? No, it takes time. So do they know if you bought a car or not? Then what if I go to another dealership and buy another car? Will they give me the loan? Yeah, as long as I didn't run too many inquiries. And then I go to another dealership and I run it again. Will they give me a car? I could walk out with 4 or 5 cars in the same day, right? If I do the same, do you guys understand? Does that make sense? Same.
You tell us.
Yeah, but we're not buying cars because that's a depreciating asset, all right? We're getting into real estate. So that's the same principle in the credit industry. But if you don't do it right, then they're seeing the other applications. And some banks, like Felix was saying, are more lenient than others. Some, like Chase, again, they don't like you applying to a lot of banks. If they see you apply to a couple too many, they're going to decline you. That's one of the reasons you might want to do them first. Kind of example. So there's a lot of things that play into this account, whether you live on the West Coast or East Coast. That's our job to help you kind of build that out so you can have the best results.
Yeah. And then also understanding reconsideration. So basically a lot of times, I'm sure some of you guys got denied for credit cards in the past, right? Is that right?
Raise your hand for that one.
Okay. But in the past, I would get denied for credit cards and I would take it as kind of like, for face value. I thought, I'm not good enough. I can't do anything about it. But actually, a lot of times, like 80% of the time on why your application gets denied is because of the information that you put on the application itself, it doesn't match with the credit report that they're pulling from, right? Sometimes you misspell your address by one letter and you just need extra verification. So seeing that decline letter right off the bat, you're just thinking, okay, maybe I'm not good enough for this credit card, when in reality it might be a mistypo on your end, right? So what you guys want to do is when you guys do come across decline application on credit card application, you just want to call into the bank and then just ask them what was the main reason I got declined and then work on that over time, right? So I think a big one was, what's it called? Yeah, we decline you just because your credit score doesn't meet the requirement that we're looking for. And I'm just like, I came in with like a business investor mindset. I'm like, look, I want to start a relationship with you guys. And obviously I'm banking with this bank, but they're not offering the products that you guys offer, right? Would you mind reconsidering the application just because I want to bring business to you guys? And on top of that, if you do approve me, I might bring, my partners into your bank as well, right? So on the lender's end, what they're thinking is just like, okay, if he can bring me more business and I can just go above and beyond and just get him approved on one product, then it's worth the trade in that sense, right? So you're kind of like playing negotiating with them. Like everything, especially in the credit card world, financing, you can negotiate your annual fees, your interest rates, the points that you're getting. So understanding that mindset just makes me a little bit more comfortable and adds more leverage when it comes to getting the things that you want, right? And then you can also reconsider for a higher credit limit. So let's just say they approve you for $5,000, you can just call in to say, a business is doing $30,000, $40,000 monthly revenue, $5,000 is not going to help me pay for any costs. Would you mind bumping this up to like $15,000? And a lot of times they will actually do it for you, right? So more of the story here is just it wouldn't hurt to ask and it wouldn't hurt to negotiate with them at the same time, as long as you bring in valid points and then you see it from their point of view as well.
Yeah, you can't
right?
just
What
tell them I
benefits
just want
them.
more money to spend. Like you gotta, you know what I mean? You gotta back it up a little bit.
Cool. And then this is pretty much kind of like repetitive information on what's an ideal credit profile for funding, right? So again, no late payments in the past, how many months? 6 months, no collections, no derogatory marks. Staying under 10% is actually perfect across all your revolving accounts, and then having high limit credit cards as well, right? So I use this as leverage just because banks use something called comparable credit when they issue you credit lines with a new bank. So for example, you apply for Bank of America for business credit cards. What they will actually do is audit your business and then your personal credit cards and see what is the highest limit that, for example, Chase has to give you in that sense. So let's just say Chase gave you $10,000, they're probably going to give you $10,000 or $12,000 in that sense, just because they want to pull you away from Chase and bank with them in this case, right? So understanding that, right, I always request for credit limit increases on my card as long as it's a soft pull. And sometimes you can also combine credit limit from one card to another so you have a bigger credit limit to work for, just knowing the fact that when other banks pull from you, they want to match that credit limit on the new card that you apply for.
Can we unbox that a little bit more, Felix? Tell them the hack of transitioning limits. Like, let's say, I have a card that was okay with Chase, 5K, and it was good, and my 0% ran out, and I just got approved, or maybe it was 20K. And I just got approved with a new card of 0% interest, and it was only 3K.
Yeah.
Well, what's the suggestion you could do there?
Yeah, so you can actually, let's just say one of the cards, the introductory 0% period expired, and you got approved for another 0% card with Chase. I would transfer actually almost 99% of my limit to the new card. So now I have additional, let's just say 19,000 of 0% for another 12 months to work with, right? So it's just really understanding like the rules behind it, and that knowing that you can transfer credit limit from one card really depends on which bank and which product that you're using.
Yeah. And keep in mind, guys, the high limit cards, it's just the same thing. Like, okay, just be really real here with you guys, okay? If you had a good looking partner in your life, everyone can assume that your next partner is going to be what? Good looking, okay. If you had a bad looking partner, they can assume that. Maybe not the best. All right, it seems people were quiet on that one. Okay, same thing with the credit lines, okay? This is why it's important to you're not just applying for random things. If they see a nice $10,000, $15,000 credit line, it's easier for you to get $100,000, $150,000. If you have $400 or $500 credit cards, you think it's gonna be a little bit harder? Yes, and this is where it's kind of important, sometimes especially when people are building profiles, because not everyone has a big, crazy profile like this, it's okay. You know, a lot of people want to get 5, 6, 7, 8 cards, but they're all $500 to $1,000. Is that really going to be helpful, guys? No, you'd rather get 1, 2 cards, get $2,000, $3,000 limits, and slowly build them up. Ask for increases every 3 months. Ask for increases every, 60, 90 days, and get that bumped up. And then once you have a $10,000, $15,000, $20,000 line, you think it's a lot easier to go get lines? Yeah, see what I mean? You're building up that profile. You're showing, hey, they see value in me, which is why I have this now, and I'm able to do these things. It's a little bit of different. So you want to make sure you do that. Yeah. Inquiries we already went over, guys. Again, if you have like 20 inquiries because you went car shopping, I saw a lot of hands. How many times they run your credit at the car dealership, guys? A lot, right? Did they even tell you? No, it just kind of happens. If there's any car salesmen in here, I'm sorry, but not sorry. Okay. But the whole idea is that you can get that stuff off because they didn't need to be there anyways.
Cool. Okay, so just to reconfirm, a lot of times why we get denied for business credit card or personal credit card is because number one, your business is not structured correctly. Again, the name of the business, any indication of real estate construction on the name of the business is going to be a big red flag, as well as the industry code, right? The industry code is a big one as well that the lenders use. Your personal credit profile is weak. It's not meeting the parameters, mainly the 700 plus FICO 8 score, and then not having enough age history behind it, or even applying for the wrong funding products in the wrong order, right? So sometimes when you're trying to maximize the funding potential, but you don't know the specific rules or data points behind each bank, and you're just applying and guessing on which banks to apply for, it can actually do a disservice to you, and you get declined a lot of times from that, right? So, yeah, cool. So now we understand kind of like the frameworks of business credit card and why applying for all of them at once is going to really maximize the amount of funding that you can get. Now it's understanding the 3 types of documentation level when it comes to business funding products, right? So again, business credit cards, personal credit cards fall under this category where I know for a fact that only my personal credit is being pulled in the relationship with that lender, but they don't ask for any tax returns, bank statements, and whatnot. So that's what we consider no document type of funding products, right? There's low document loans. In this case, it will be in the form of like business lines of credit, sometimes business loans, right? Where they might ask for 1 year of tax returns, your articles of incorporation paper to show credibility of the business. And there's something called like full doc loans where, let's just say you're applying for an SBA loan for real estate. A lot of times they might ask for your personal net worth breakdown. They might ask for your resume. They might ask for 2 years of tax returns, 2 years of business experience, a breakdown of that, and they might also interview you on top of it, right? So what we're focusing today is where we don't have to provide any of those, right? Just to get the funding that we need.
We want to be Haley. That's yeah. So credit stacking. So the reason we kind of been focusing on this again, right, is we're focusing on having multiple cards. So are you going to get one card that's going to give you $150,000? No, unless you're George. But other than that, okay, the idea is that it's okay because you want to build relationships with these banks. So if you notice here, right, we went with Chase and this is secret stuff for you guys, right? We're actually showing you guys which banks we're applying for. Everybody's is different though. So you notice that this sequence is going to look different from the next one and the next one, and we're not going to show you that many, but from different ones because the profiles are different and the business entities are different and where they're borrowing is different. Sometimes they don't even have the same bank in the same city, right, or same area. And again, what the focus is, what we're looking for is 0% and then timelines. Now keep in mind, guys, this is only the intro offers. So part of what you want to do is learn how to negotiate with these so you can get extensions. So if I get 15 months, but in reality, maybe I'm going to get 24 months out of them or 30 months, right? Or I might transfer to another card and then they might give me another 0% offer. They do that because they're fighting for the interest. They want to get paid, right? And if there's 0% interest and you paid it off, then they're not making money. But if you just move the money somewhere else, they want a chance to at least make some money. So if you don't have a lot of personal cards, that's something that's really important too because we want to build out that heavy profile. Does this client got a couple of business cards?
I think just to add some context to this is a client that has a 6-month-old LLC. And at the same time, they want to maximize their funding potential, right? So I know right off the bat, some banks will require 1 year in age for your business to qualify. But certain times when you have relationship with certain banks, the banks are willing to approve you for a business credit card in this case, right? So this one was a 6-month-old LLC, and this one was a sole prop that he got approved for on the business end. right? And then we also, his objective is to get as much funding as possible, so he wouldn't mind personal credit cards. But sometimes personal credit cards get you higher limits than business credit cards too, right? So it's really understanding which banks do that and which one don't. Yeah.
So that's this file. And then we took the names off, so I don't know who this is. But again, you guys notice a little bit difference. Does this one have more business or more personal? Okay, so can we take an assumption that this person probably had a more structured entity? Right, makes sense. And they really didn't want any personal cards. We just kind of got one just to add in a little bit more for what they were looking for. But you guys notice like the rates look pretty good for business cards, don't they? 0% and how long? 12, 18 months? Especially in the short-term rental game, like that's a good place to be, right? Yeah. That's enough time to make your money back. Obviously, are you trying to throw this money into long-term properties? Probably not, but this is a great place for you guys because you can borrow this money 0%, put it back, leverage it, and again, it's not going to be reporting anywhere else. Again, so you guys notice, first two cards look kind of similar. Does the rest look different? Yes, go ahead.
Okay, this is my question. Okay, Chase approved me 7 months ago for a business credit card for $5,000.
Sure.
On month number 7, I called them and I say, hey, can you increase my limit?
Yeah.
I never got a 0%,
Yeah.
by the way.
Yeah.
Nah, I'm still paying percentage. So, but they deny me.
Yeah.
So do they keep running my personal credit with my business credit to decide if they're gonna give me more money or not?
It depends. So here's the thing. They're still looking at the utilization, right? So if you have high balances on the business card, it's still going to take into account, right? And if your personal, they still check. Like, so Chase is one of those few banks that even if you haven't talked to them, like every couple of months, they'll do a random check on your profile. And if they see a red flag from another bank, that could be a reason for them to keep your lower limit or even close accounts sometimes.
So they do still.
They do still, they keep their eyes on, right? So we can still help you get approved. Again, it's just understanding the data points and finding out why they denied you. So you got to find out why, right? Because
the reason I did call them is because I felt really comfortable because I didn't pay any interest in 6 months because
Yeah,
I was
you're just paying it off,
paying
yeah.
Paying it off. And I said, well, why not? So
Yeah.
for sure they're gonna increase it because I got another property and they needed the money.
Yeah.
And they say no.
also it's data points again, new income, revenue. There's a lot of things that are going to take into account, but we got to find the reason you got denied first, right?
Yeah.
So
And
you
then-
get a letter.
And then a big one as well is building connection with a business relationship manager. So actually going in branch, sitting down with the banker, and then actually voicing your concern, because they will go above and beyond for you at the end of the day, right?
The person
so
that
that's
can fight
how.
for you.
Yeah, sometimes. Like I got approved for 10,000 at one point, but just because of my relationship with the business banker and the contact I have, they bump it up to 50,000 in this case, right? So it's just that relationship is a big one, and like Daniel said, like knowing the reason why they decline you for the request is as important as well.
So if we know that reason, we can help overcome it. But if we don't know why you got denied yet.
It will be a good idea go with another institution.
Not necessarily. We just got to find out why you're denied. Because the reason, and we got you and then Haley too. And then I need more people's names, by the way. I can't see them. So keep in mind, Chase loves debt right now. They're one of the only banks that are continuously aggressively taking on debt. So you don't want to count them out. So we just got to figure out why. We can figure out why. There's probably a good workaround, especially good FICO.
I do.
Yeah. So there's a workaround. And again, this is why you want to have leverage, right? So we have direct underwriters with Chase that we can leverage too. We've built the relationships, so it makes it easier on our end to do those things. Anything else you want to add to that? Or
No.
we go to more questions.
Good.
Go ahead.
I was wondering if I should get rid of all like my personal credit cards, like the store credit cards, to build up more of my FICO score.
Get rid of them?
Just close them all out and. just
So
strictly-
it depends. Yeah, and so every profile is different. So here's the thing: if you have like 8 years of history, probably not the best idea because you're gonna lose a lot of that history. That's the part that sucks. And this is like, who's ever had like that car that you're so excited to finally pay off, and then when you pay it off, your score drops? Does that happen to anyone? Right? That's because the history no longer goes towards it. So if you do that, you're gonna lose the history. So it's got to be case by case. We'd have to look at the profile. If there's negatives in the history, then maybe it's worth it. But if there's not, it might actually be contributing to our FICO. We just got to figure out how to kind of tweak it a little bit and manipulate the score in order to show what we need it to show, right? So that's case by case. Every profile is a little bit different. So typically the first thing is stay away from store cards. But if you already did them and they already have a lot of age, unless they're really small, because I mean I've seen like beauty credit cards for like $7,000-8,000. Like they're not
But
going
they
to
sign up like doing high school and going.
They just, we'll get to you too in a second. So it depends. We got to audit the profile, right? And then we kind of got to go from there. There's not a blank answer I can give, unfortunately. Yeah.
And then another way, so let's just say you have a credit card, but then the annual fee is like too hefty for you, right? That happened to me with one of my business platinums, like paying $700 every single year is not worth it to me at that point, just because I have other platinum cards as well. I actually downgrade a card to maintain that history of the account, but it's a different product from that case, right? So now by downgrading the card, you actually lower the annual fee to a different, maybe like $50 or even zero in that case.
Okay. And then we got Haley and then the missus in the back.
So you had said that you should try to stay away from categorizing yourself as like high risk lending, so like not
Yes.
put real estate.
Yes.
But then you guys also said that don't like give yourself away in your business name. So like for my example, I have homes in it. It's like
Yeah.
Haley's Heavenly Homes.
Yeah.
Would you say that that already kind of like gives it away? And
Well,
what would you do at that
I-
point when we already have the LLC in place?
I would consider doing like a DBA,
Yeah.
like a doing business as, and then you can file that with the state. So basically, for example, like let's just use our company, right? OPM Mastery. Let's just say it's OPM Real Estate, right? But under that conglomerate company, we have different products and services that we offer. So what we do is we file a DBA for each different product that we do, right? So maybe for, we do like real estate marketing for that sense, right? And we will file a DBA for like, OPM marketing,
So like
right?
when you apply for the card, you say you file a DBA, which is saying that
Yeah.
you're doing business,
Business as.
Doing
A separate
business
name.
as a separate
Okay.
service under that main company that
And
you
then
have.
you also had said like you file, because I know like I had to file the LLC under like this Secretary of State or
Yeah.
whatever. Were you saying like you could just go back in there and if, I don't remember what I put it as, but if I put it as real estate, I could go back in and like,
Change it.
just
You can
change
update it.
Yeah,
Yeah.
you can file a change. We use the ink file, so we can log in and then we can talk to the register agent and say, hey, we actually, switch our business model and we'd like to do a name change or a name industry, change on the classification in that case. And they will help you file that. Or you can do it on your own as well.
Okay,
Yeah.
Yeah.
thank you.
Good. Yeah. Awesome. And then
I just had a comment on the tails of the other question.
Yeah.
Because I hadn't thought about like, I've got an old Navy credit card. I don't use it anymore because
Yeah.
I use my Chase stuff for
Yeah.
miles. But I'd also heard it was good to like use all your cards even if it's once a year, just put a little like $5 purchase
Yeah.
on it
Mhm.
just to,
keep it open.
yeah.
Just
so
to keep it
but
open,
Still, even though like, I was thinking, oh yeah, I've got great credit.
Yeah.
So I just left them open, but I don't always remember to go.
Yeah, I
use a
would
couple of
put something super small on it just so
Yeah.
they don't close it on you because that part's really irritating. You've built history and obviously you're not really using it anymore,
Yeah.
but it's there, right? And then, all of a sudden accidentally they close a 10-year-old card just because you forgot to use it. That happens. That happens. And it's crazy because it happens to people with really good credit, right? Because they're like, well, I don't need that card anymore. They didn't give me the benefits, they didn't give me cash back, and now I have all these. But if you close them and they've been around that long, it's gonna hurt your score. It's 35% of your FICO is that payment history, and just having it on there is really important.
Yeah, just put a subscription and then do like auto minimum payments each
Yeah.
month. So it's automated for you, right?
Oh yeah, all right,
Yeah.
let's go through and just shop on all of them.
Yeah. You do that too. You can do that too.
Different OnlyFans subscription for each, right?
And then I think we saw a question back there somewhere. Go ahead.
When you say that you negotiate with people,
Yes, the banks.
yeah, like who specifically are you looking to negotiate with? So he said to go in to the branch and speak with a banker, because like if you call, it's like someone from India.
Yeah, no, so
No.
Yeah.
yeah, so you number one, call through during business hours, okay? Number two, yes, that's where we're talking about building that relationship, right? So you're not just going in randomly to talk to a banker, you're gonna have that relationship established. So let's just say Chase for the example, because it's just the easiest one everyone knows, right? You got this card, you have a $40,000 limit, $50,000, you've been paying it off, you've been doing good. You go in every once in a while, you get on a first name basis with one of the bankers there, like, hey, I have some questions about business products. Even if you're not opening anything else, right? Say, well, this is how it's going so far, and what should I? And you just kind of act really innocent, right? Like, hey, what should I do about this? And my 0%'s about to run out. Like, do you guys think there's anything you can do? Because, I want to keep my money here with you guys and keep you guys, but American Express is offering me a 0% for like 12 months, and it's just kind of making them jealous a little bit, right? They're like,
Yeah.
oh yeah, I could definitely, because you know how Felix was saying, they can fight for you. So you can say we can submit for that, but they can fight for you. They might come back, you might not get 0%, but say, hey, you know what? We're able to offer you a 4% for another 6 months. Is that, you interested in that? You're like, yeah, of course, right? You don't want to pay 20, 30%. So that's where the relationship building is super important. There is also a line that you can call in directly. It's just hard to get on the phone with them. So you also have to know which numbers to call and which buttons to press, right, to get to a real person that can help you out. and just ask for managers sometimes. It's part of it. Good? Yes, go ahead.
So you actually need to have an LLC before open a line of credit?
No. So if you have an entity, it's going to get you much more funding. But if you don't, we can still get you funding as a sole proprietorship and get business cards as well. It's just not going to be as much as, you can't get 200,000 with just a sole proprietorship.
Yeah.
Yes.
If we did put like rentals in our LLC name,
Yeah.
can we change it?
Yeah, that's what we're saying. You can go back to the Secretary of State and amend that and just say, hey, I just new business. We're kind of changing what we're doing.
Even if it's like my LLC's name.
Yeah,
Okay.
because you can amend names and everything.
Okay.
Yeah, you can do all of that. It just costs money. Let's hold questions for a little bit more. I want to make sure we finish this, and then I saw one, and then another one.
Mine
Right?
was connected to
Okay, go ahead.
finishing hers.
Yeah, go ahead.
So you're saying like change your LLC is the name of a house, say?
No, like the word rentals is in the name of my LLC.
Gotcha, okay, because I had just asked Coach Tony about like our LLC, our properties in there, because we did put our LLC name on the lease. Our
Yeah.
names are on there too, but.
Yeah, you just
thinking
update it
about-
though. You can change it and say it's the
change
same
it.
because it's the same EIN. You're not changing
Right.
like the structure of the
Right.
property.
Okay.
Now, okay, perfect. Yeah, let's finish up real quick. I have one question back there. I'll get to you right now, and then we'll finish up, and then we'll finish up question 15 minutes.
Yeah, so there's different tiers of funding that you can do dependent on your credit profile, your relationship with the bankers, and most importantly, the age of the business. And I would say this is kind of like the final phrase in terms of maximizing your funding potential when it comes to not having to submit any documents in that case, right? So at most, at one time, we're able to get $278,000 in the span of 1 week. And what we do is on top of applying for the business credit cards when we enter these institutions, is when we sit down with the bankers, we will ask them for a business line of credit at the same time too, right? So do you guys know what a business line of credit is?
Yes.
Okay, so business line of credit is pretty much they deposit whatever you're approved for. So let's just say 75,000. They actually deposit that into your business checking account, and you can pull from it anytime. So it's just like you can access the cash right away and treat it as kind of like a savings account in a
Yeah,
sense.
you treat
right?
it as liquid and cash.
Yeah.
It's not as a credit card.
Yeah, and then whenever you pull from it, that's when the interest start kicking, and then after you pay it off, then you're good, right? But you can stack it on top of business credit cards and business line of credit. And one thing I like to do is I understand that business line of credit is sort of like a term loan. So the utilization doesn't report to the business credit scores or your personal credit scores. But I know business credit card, on the other hand, depending on how much you use, might affect your business credit at the end of the day to apply for more funding, right? So I would use the business line of credit as a way to pay off some of these business credit card. So my business credit score will, skyrocket in that case, and I have the ability to apply for more funding, right? It's just being really strategic with how do you leverage, other financing products to pay off your original product at the end of the day and keep more of your cash flow on whatever you guys are invested in. If that
Just
makes
move
sense.
money, guys. Just
Yeah.
move money.
Yeah.
Beautiful.
Oh, cool. Another example is like if you have personal debt, you write personal credit card debt, you can apply for a business credit card, and then you can shift that debt over, right? Now it's hidden from your personal credit, your score jumps back up, and the personal balances is rotated over to the business credit card, knowing that it doesn't affect your personal credit, right?
Yep, and then you get more funding. Leverage more money.
Wait, sorry to interrupt you, but sorry. So you were able to move personal to a business,
Yeah.
or can you do business to personal? I guess that's my question. Like, can you do a personal debt to business debt? You could do that.
Yeah, I transfer my personal. So let's just say I have like $10,000 of balance from like going to the club too much and whatnot, right? And I'm just like, my score went down a little bit, but I was qualified for a business credit card. I know, liability there, right? So I applied for a business credit card, and let's just say I got approved for $25,000. What I would do is I would take the balance from my personal credit card and just rotate it to the new business credit card at 0% interest, just because I'm paying interest on the personal debt that I hold on my personal
And also
credit
now
card.
hides the utilization.
It hides the utilization, right?
Yeah. You typically wouldn't want to move business debt to personal, but could you technically? Sure. Like, would we recommend it? No, but you could.
And this would be with the same bank, right? It wouldn't be.
No,
that
there's
balance
other way to do it. So you don't necessarily have to do it through a balance transfer. You might have to pay like a transition fee by using a merchant, or sometimes there's cash advance checks. You can do balance transfers.
Yeah, so for example, I will have, let's just say I got approved for a business credit card. I'm trying to take the money out of it. I will have Daniel's company invoice me and now use that business credit card to pay for it. That money's get deposited into his checking account. He wires the money back to me, ACH the money back to me, I pay off my personal credit card. Now, what I'm basically doing is just rotating the debt over to a different product.
Yeah.
And in that sense, I'm buying myself another 12 months of no interest as compared to paying like 25% in interest or cutting into my cash flow, especially if you guys are doing building a business or investing.
Yeah.
Awesome, thank you.
Yeah. See this, another one. Let's go into the next one. We'll kind of break it down in the concept. Guys, I'm going to end with this so we can finish up these questions right now because we're like 5 minutes, 8 minutes, something like that. Good? Okay. See what happened? We had too much time and then we got carried away. Let us tell too many jokes. Okay, so this is the industry that you guys are in, right? Whether you're in arbitrage now or you're planning on buying in the future, like this is the really cool thing about this industry that you guys are in. You have it's three-dimensional wealth, guys. And you could be fourth-dimensional as well. But it's one of the few places where that even exists. Most places you can either make money, right, or you can get equity. There's not a place where you can get both, right? So you keep in mind, you get appreciation on the property, right? You get cash flow. You're paying down debt, which is an asset that you can leverage in the future. And then it's tax benefits. A lot of people just talk about like, oh yeah, write-offs. Like, guys, you can accelerate depreciation. You can keep more of your money to keep reinvesting and just moving it over and over and over again. The whole idea of using credit lines at 0% interest is not necessarily to use them for the rest of your life, right? Because at some point you guys want to get into bigger deals, right? But it's how to accelerate that. How do I get 3 properties this year? How do I get 2 properties this year so that 10 years from now I have 100? So I have 150. At that point, at 150,000, you guys think you're going to use 0% interest credit cards? No, you're going to go get commercial lines. You're going to pull HELOCs. You're going to do a bunch of other stuff to leverage. But the whole idea is you don't have to wait 30 years to do that, right? That's the whole idea of this. So overall, you're building wealth and you're protecting it in assets that are good, right? Like you're not, I mean, no shade, but you're not buying an Amazon store that's going to get shut down next week. You know what I mean? Like you guys have an actual business that's tangible. That's the beautiful thing of where you guys are at right now, right? And then compound interest throughout this entire thing. Guys, it's just a beautiful thing where you guys can actually retire. You have money, where you have wealth, where you have protection, and then you can pass on a legacy. Right? It's important for everybody, right? It's not just making money now, it's actually having it in the future, making your last name mean something different. Right? At the end of the day, that's what OPM Mastery is really about. Master other people's money so you can create legacy for yourself, right, and your families.
And that's what the rich people do, right? As you can see, like they leverage debt, they get money off the bat to invest into any investment vehicle that's going to produce return. Based on the cash flow from these investment vehicles, they understand that they can leverage on top of that by borrowing against that asset now, right? You have credibility on the cash flow, you have intrinsic value of the company or on the rental property itself. You borrow against it to tap into more properties rather than sacrificing your time to, earn more, save. And
yeah. And because you're borrowing, guys, right? We talked about this. Borrowing means no what? No taxes. I said debt means no what? Taxes, right? That's the beautiful thing, guys. That's where you guys are at. Leverage it, use it, right? Anything else, or we go into questions now?
No, we can go into questions.
Okay. We missed you in the back.
I just want to know with the whole name changing of the LLC, it does nothing with the history.
No, because the EIN is still the same. Like that's not what's changing. You're just renaming the entity. Like, hey, we just kind of shift the version of how we're doing business. We're not focused on that anymore. We're focused on this. I think the name should reflect that. It's like, oh yeah, that makes sense.
Oh, okay.
Yeah.
Just making sure. So like, if I change it next week, and then they're like, oh, let's see the previous history. And
No, because you have the same business making it. You're just going to update the names and everything else in between. So it's going to be a little bit of cleanup work to make sure everything is aligned with it. But you're not changing the business entity itself. Like you're not changing the EIN or anything like that. Like it's the same business. Yeah, it's just a name. Yeah. Who had their hand up first? Okay, sorry.
Mine's quick, I think. In the beginning, you guys opened with a 4-step framework. Can you just bullet point the 4 things?
Go back. It's a lot of stuff.
Yeah, so first step is definitely just understanding the foundation and switching your belief system. I feel like with everything that we do, we need to have our core beliefs fall under that category because it changes your perception on how you do everything from that point on, right? So understanding the system, how it works, and having good credit. Step 2 is leveraging good credit by understanding what good debt is, because it's one thing to have good credit and have the money available to you. It's another thing to know what to invest in and what to do with that money, right? So understanding the vehicle that's going to take you to where you want to be is going to be very important. And then number 3 is investing that good debt into, again, your
Scaling.
assets to scale it, build cash flow. And then number 4 is learning how to borrow against it so you can use it to
do it all over again.
Yeah, do it all over again, and then repeat that process, right? So that's why you see a lot of billionaires, when they buy yachts, they actually borrow against their business. Or if you have like a large stock portfolio, there's something called asset secure lending, which you can borrow against your stock portfolio and the value of it to get money in hand in the form of line of credit and use that to purchase the things that you want, right?
Is that way it's not taxable?
Yeah, it's not taxable. And you save yourself like 20-30% right off the bat. Yeah.
Back, and then we'll go over here. Yes, go ahead.
I have a question. So I recently got denied on a card where they pulled from Experian.
Sure.
And I have an Experian membership, and when I got the letter from the bank, the credit score that they had on there was 100 points lower than what's actually on Experian's website, and I called the bank and they were like, no, this is what it is, but I had the experience. Do you know like why there would be
Sure.
that
Yeah.
kind of
So
difference?
there's different FICOs even on Experian. So you got to see which FICO they've pulled. So some banks are transitioning to FICO 10, not very many, but there's some. So it's just understanding, and also when they pulled. So sometimes banks pull outdated reports. Even though you run credit today, they might have actually pulled the one from last week or a week and a half ago because they don't have the full updated one yet either. So little things like that, like maybe you paid off a card, you don't want to do it right away. I got you noted. You don't want to pay off right away. I mean, you don't want to apply right after you pay off because they might not actually have seen it yet. Even though it's updated on Experian, they might not have gotten the updates. You usually want to wait like a 2-week gap before applying again. Yeah. But you also want to see which FICO they pulled because there's different FICOs, right? So you got to really read that letter and say, okay, what did you pull? What did you see? And what date did you see it at? Yeah. And then those things will help you get things
we can actually do like a visual breakdown because I feel like this is such an important like metric to keep track of, and then just give you guys some tools, right? So basically, like there's 3 main credit bureaus. There's like TransUnion, there's Equifax, and then there's Experian, right? So off the bat, you have to understand that each bank, they don't pull from all 3 of the credit bureaus. Sometimes they only pull from 1 as compared to like pulling the other banks pulling from 2. So that's why it's so important to have access to all 3 of your credit report. So let's just say you do have like a collection, like a negative account, but that company that you have a negative account on only pulls from TransUnion, then you know your TransUnion credit profile is kind of like fucked, right? But let's just say you're going through funding, right? And then you do meet those credit score requirement, but you know that bank, they don't pull from TransUnion just because you have subprime credit on there, but they pull from the other 2 banks, right? Then you have the advantage in terms of getting approved for them, even though you have a negative item on your credit report. So I guess more of the story here is it's important to have access to all 3 of your credit report and understand every time you apply for something, ask them which credit bureau do they pull from, and then optimize that credit bureau beforehand, right? And then another thing to keep in mind is sometimes Chase, they pull from Equifax, but in a different state, they might pull from Equifax and TransUnion or Experian in that case. So it's really based on the zip code and a number of factors, but mainly kind of like the area that you're banking with them on. They pull from a different credit bureaus. Does that make sense? I know it's a little bit, this is like too much.
Good. Okay, there was a couple one. It was her first, then gentleman over here, then gentleman in the back, then you, then her. Okay.
See if we can remember that one.
Yeah. Okay, go ahead.
When it comes to like furnishing the homes and all that, of course it takes funds. Would you say stick to one bank and ask for credit limits more constant, or branch out to other banks to have multiple cards?
Yeah.
Is there a better route?
Well, it just depends what your funding sequence looks like, right? So if you get a good amount and you can put it all under one bank, fantastic, right? If not, you might need to leverage some of the other accounts, then that's okay too. So it really depends on that profile. Once you have them, you're probably going to just use them out for a little bit. Like most people, even with a thinner profile, as long as it's in the 700s, you're going to get like 40, 50,000. I think that's more than enough, right, for most people to launch maybe even 2 properties, yeah? Right, so I don't think it's an issue you should really run into. Huh? Just one?
Yeah.
Haley's is bougie, all right? We figured it out.
Yeah, just to add on top of that, I think that's a really good question because I will look at the opportunity cost. It's like I already have this product, I can get limit increases on it. Yeah. But at the same time, if I can get my credit pull and get a new product with a new sign-up bonus and a better offer, and I'm also building my credit business history by having an additional account, building up my credibility, I would go with that instead, right? But if you want to keep everything for accounting purposes or just to keep everything streamlined and not confusing, or sometimes that card itself has really good benefits, then I would stick with the original card. Yeah.
That makes sense. Thank
Yeah.
you.
Kind of two questions type of thing.
Sure.
Do you recommend open an LLC even if you're just starting the business?
Yeah.
And if the LLC will affect you if you want to buy a house like as a new owner type?
No, well, just keep in mind, you're most likely not going to buy the property under that LLC, right? As long as you
No,
have.
but I mean, as far as the credit, when they check it as a new,
No.
you know, they have incentives for new buyers.
Yeah, that has nothing to do with having entities. You can open 12 entities tomorrow. It's not going to affect you because you're just paying a filing fee for it, right? It's not. They don't run your credit to open an entity. So all you're doing is starting to build out new entities to really age them out. So should you open some? Yeah, absolutely. Just make sure you have some type of plan for them, right? You don't want to just spend money to open them if there's nothing that really is going to stem from it. But if you have an idea of what you're going to do, then absolutely open an entity.
Like to open the credit line, if you want to get a business.
Sure.
credit
So
line.
you can, but you're not going to get funding right away. If you open a brand new business today, you're not going to get anything approved under it right now. But 8 to 10 months from now, or usually at least bottom line 6 months, now you're in a better position. So should you open it regardless? Yes, because you want the age to build out even if you can't get it right away, right? And you want to start having the business season, right? You want to deposit funds into there. You want to show that there's a relationship building. And then once your age hits a certain point, now you can start leveraging a little bit more. Yeah. Good?
Yeah.
Okay. Gentleman in the back.
Yeah, I'm sorry if you went over it, but have you guys had any success with getting existing interest rates lowered on
Yeah.
credit cards?
Yeah, absolutely. Yeah, so they call in, you negotiate. Again, you kind of ask the questions. You play a little bit, what is the word I use? I don't, innocent, right?
Yeah.
And say, hey, you know what? My 0% is coming to an end, and I'm really looking to stay with you guys. I want to do most of my business here. I'm actually moving some more business over here for my business banking and things like that. But Amex is offering me 0% over here, and I think that makes more sense. Is there anything you guys can do? And so I'm not saying, hey, give me 0%, but sometimes they'll match it, right? Or they'll give you a lower rate and then just say, here's your introductory rate. And people get it automatically, sometimes without asking. So if you're a good borrower, you've been paying that down, you're not super maxed out, they'll just send you the offers by themselves. So they'll send you a letter saying, hey, you have another 6 months of 0%. If you want to accept, just call in and accept. Like they do that on their own as well.
Okay, and that's more recent that you had the success?
Yeah, they're still doing it. Yeah, they're still doing it. Again, if you're a good borrower. You got to be a good borrower. If you're still maxed out, and you haven't really been paying anything down, then that's going to be a little bit more difficult. But as long as you're borrowing well, and I got you noted too, then you should be okay. Yeah, good on that. And then, gentleman right there, right? No, it was you. You had a question.
Okay.
Yeah, you had a question.
Just making sure.
I'm doing the order right? I can't see names, guys. I can't see names. Okay, I was gonna say like Mexican Drake, but
No, I did have a question. So I know you talked about like the different, like the business aids, right? I have a few, but my question is, when you are applying for it, how are you getting that limit so high? I know it depends obviously on credit.
Yeah.
Is the income? So if I'm a new LLC, right?
Mhm.
I haven't made any money all year. I've been, I guess, playing around with the numbers. Should I be putting 30,000? Should I be putting 50,000?
Yeah.
Or what do you think is a good number for me to get around maybe
So-
40,000?
So just keep in mind that it's based on what triggers financial reviews and what doesn't. So every bank has different numbers, right? So you got to look at your code, your risk, and then how much lending that they typically do. So part of it is knowing what initially triggers financial reviews. The second thing is knowing is where the underwriter part's really important. The underwriter knows what the max limit for your type of entity is. Right, so sometimes some businesses will cap out at 20, 30,000 starting. Some will cap out at 75,000 starting.
So it's based off of like the real estate or the type of entity that's
It's a type of industry really. So it's both, right? It's both. So what I'm going to say on the front end on income is important, right? But it's not the determining factor either. On the back end, there's like I could ask for 10, 15,000, but in reality I could have asked for 25, right? But if I asked for 30, I might have triggered a financial review. So there's a lot of things in between if you want to add on.
Yeah, I think stated income is like, usually for stated income, you want to be a little bit optimistic. It's just like not how much you made, but what you're planning to make throughout the entire year, right? So a lot of times we would just be a little bit optimistic because I understand a big formula that they use is anywhere between 10 to 25% of your annual revenue. That might be the credit limit approved on your end. Yeah. And then there's also like back-end variables that, they put together depending on which bank you go with, and understanding those can help too.
Yeah. Sorry, it's not a super direct answer, but I'm hoping it's enough information to give you that baseline.
So it actually helps a lot just because I thought it was based off your income, and I didn't know if like I need to put more income,
Yeah.
or if I need it to
Well,
be overestimated.
Technically speaking, they can't, a credit application cannot judge you based on solely your income, right? So for example, like my little sister, before I sent her to college, I built out her credit profile because like she's not gonna be working, she's gonna be a doctor, right? Like you need money, right? And I'm gonna pay for stuff, but you still need money. And I mean, she was working at the Olive Garden, guys. Like, what kind of money is that? Not a lot, right? She was making like $15,000 a year. I got her about $60,000 in 0% interest credit cards. But I started with one card. I built out the profile. I started with an Apple Card, which I hate, but it's really easy to increase the limits, right? So this is like you have no profile. Started with like 2,000, got her to about 12. And then I didn't apply for anything else. I waited till that happened. And then her first Amex was like 18,000, blue, cash preferred, 0%. You know what I mean? It's nice. And so she was getting bigger limits based on her income being, low, right? But she had no debt either. So you know what I mean? There's variable factors. So yes, income will help, but it's not the only determining factor. So just keep that in mind. Keep that in mind.
Do
Yes.
you guys have any book or podcast recommendations?
On credit?
Yeah, on any of this.
Not Dave Ramsey for
Not
sure.
Dave Ramsey.
Because he goes against everything that we're talking about.
For credit, the thing is, there's a lot of misinformation on the credit world.
Right,
You know what
that's
I
why
mean?
I'm asking.
Yeah, I would say follow us as a rule of thumb. Do your own education, like learn more, right? Never against that.
Yeah.
But in the credit space, there's just so much misconception, or like you literally hear the short 15-second clips, like you start an LLC, you go get 200,000, then you get $1 million. Like that's not how it works, guys, right? It's not how it works. Like. Through traditional banking industries, like we come from the industries, we got to learn inside of it. We got to talk to underwriters, listen to their data points, and then through trial and error of 60 million plus. It's a lot. It takes a long time
We actually have like team members that call into each bank to get updated information on their underwriting, who they pull from, and a network of lenders.
Sometimes they're mean. You have to hang up and call again. You literally got to do data point research. It's all data. That's all it is. So it's not just like. There's a one secret hack for everything. There's always data and it's always updated and you always have to keep learning more.
Yeah, keep in mind like the principle and the framework are always going to stay the same, but the strategies and the tactics of the products is always going to change, like on a quarter to quarter basis. Because what works today is probably not going to work like 2 weeks down the line when it comes to the banks changing up how they do underwriting based on what's happening in the economy with the industry, how much they can lend to on a per quarterly basis, right?
You guys should start a podcast.
We're working on it. We'll do it for you guys. I think. Okay, sorry. I'm sorry. You were off to the left. I couldn't see. I got you after. Go ahead.
You mentioned your sister. What age can kids start building, get their first credit card?
Okay. So when they're young, you want to add them to an authorized user if you can. 1 to 2. No, don't add like 7, 8 cards. Okay, just 1 or 2. And you can add them usually 16. Some banks are doing 12, right? 12 years old, 12 to 16, depending on the bank. You got to call in and figure out. Sometimes they let you add them while they're younger. So that profile is just building out, right? So then when they're 18, they can go get their first card and it starts at a little bit of a higher limit. If not though, at 18 too, you can add them on a card, and that at 18 by yourselves is when you can start applying for credit, right? But you can do some work beforehand to make sure that those younger people are progressively ready to actually acquire credit and acquire good credit, right? Not the bad Capital Ones or anything like, you know what I mean? Like actually good credit cards, 0%. I would stay away from the student credit cards. They're great if you're a student, but realistically,
if you have family members, especially your kid that's trying to buy a car and they're like under 18, like normally when you co-sign with them, it's going to help them build a credit as well, right?
Yeah.
And then keep in mind, like banks, they value personal loans and installment loans, mortgages, and car loans over credit cards as kind of like the only accounts on the credit report, for the reason that every single month you're responsible for a fixed payment, and if they see your history that you're making those on-time fixed payment at like $2,500 or $500 to $2,000, they're more incentivized to give you a higher limit credit card, knowing that you can make those sort of payments in the past, right? Yeah.
Good on questions? Yeah, we're good now. Ask George. Yeah, ask George. Yeah, sorry. Sorry, George. You pick. There's 2 people. I don't want to be responsible.
How about you guys talk to them at break time? Just because we're like 20 minutes over.
Yeah.
So I want to give you guys a break. Yeah. All right. Give it up, guys.
Yeah.